Hello, welcome back to Jhin Seok Stock Talk. Today's my 5th episode. It's going to be a simple guide to success, and unfortunately this is going to be my last video, so this video will pretty much be like a send-off to you guys, so you guys can one day be great investors and make lots of money off of stocks. So yeah, firstly, because I am a high school student, even though this series is to help you guys get like a head start and a jump into the stock world. I'm still a high school student and I don't have even a college education on this, so you should definitely not listen to what I say when it comes to how you put your money and how you use your own money. I'm not a financial advisor, so you should not take my word for your finances. But besides that, I'm going to be going over the most important tip that I want you guys to take away from this is doing your own research. There's many ways to get research, and even on the internet, you can get the news, watch YouTube videos. Watching YouTube videos is pretty good, but a lot of these other series and courses on YouTube aren't really the best, or there are really good ones. There are very solid ones that I can link in my description. However, not all of them are financial advisors, and they say that in their series as well. So that's why I'm saying it's not that good of a source. A really good source, though, is reading books. There's many different books that you can read to learn about stocks, but here are my few favorite. I'm just going to pop them up on the screen. We have The Intelligent Investor, One Up on Wall Street, The Warren Buffett Way, How to Make Money in Stocks, and Stocks to Riches. These are a couple of books, some of which I've read, that are very helpful and will help you expand your knowledge in stocks. And finally, my last tip in doing your own research or getting your own research is to just simply look at markets. Open up your platform, whichever brokerage you're using. I personally use Webull, but open up your brokerage and look at stocks. Look at patterns. Try to figure out what is going on during the time where stocks are either going up or down. Like look up. You can easily look up the news of when stocks went up and when stocks went down on that specific day. And if you're able to figure out why things are happening, that's the quickest way you're gonna learn. Is just putting in the time to figure out why trends happen. The next tip that I'm gonna be going over is deciding how much you want to invest. This is going to be quite tricky at first, but it mainly comes down to how much income you are getting. And of course, it's fully up to you. You can invest 50% of your income. You can invest 10%. You can invest 1%. But usually a safe percentage of your income that people recommend to invest is around 15 to 25 of your post-tax income, which is your money that you receive or the money that you make after all taxes are paid. The next tip I'll be going over is, what is your investment strategy? What are you trying to get out of investing and buying stocks? You can either go the long-term route, which is buying index funds and blue chip stocks, which will most likely guarantee a return on investment. Index funds yielding around 7% ROI per year, which is outpacing inflation, which means your money is not losing value, but it's actually gaining value. And it's not just sitting in the bank. You're actually doing something with your money. Although it's risky, there's always a safe route. Although you're not always guaranteed to make money, 90% of the time you will get a return on investment if you go a very safe route when it comes to stocks. And the other strategy is either day trading or options trading. This is usually for people who have a lot more time on their hands to put into stocks. For example, during my summer break, this past year, I tried options trading. Although I didn't make like millions of dollars. It was definitely a good learning experience, and of course it was through a custodial account, but it was definitely a good learning experience and helped me understand the markets a lot more and helped me learn a lot quicker than just putting my money into an index fund or a blue chip stock. Figuring out what you want to do with your money when it comes to stocks is very important. The next tip is keeping your portfolio diversified. Although this is not a tip for very beginners, as you get more comfortable with investing your money, you should try to expand your portfolio and diversify it into different types of assets, because not just because you invest into index funds always won't do well. Index funds are not always going to make you money. That's why having your money in different assets will guarantee, or not guarantee, but help leverage out the losses. And it's just more, it's different types of income, not income, but different types of investments, which will make you a lot more secure in the money that you're investing. And these different types of investments that you can put in are stocks, bonds, ETFs, mutual funds, securities, which all I've gone over all of them in my series, and you should know by now what each of them are. The next tip that I'll be giving you guys is figuring out your risk tolerance. It is very important to figure out your risk tolerance, and there's a very easy way to figure out your risk tolerance through this questionnaire, and I'll link this questionnaire in my description of the video so you guys can quickly fill it out. And the reason why I say figuring out your risk tolerance is so important is because you can create strategies around your risk tolerance for maximum returns, which means it'll keep you comfortable and make you money. Who doesn't want that? And the different types of tolerance have different types of strategies. So for example, low tolerance, if you have a low tolerance, you can invest in blue chip stocks, index funds, securities, and bonds, which are usually the most, they're not guaranteed to make you money, but they are the highest return on investments. And they're the most safe, I'd say. Medium tolerance, it's similar to low tolerance, so there's not that much of a difference, but you might be able to put more money into different assets, and maybe put your money into mutual funds and just diversify a lot more. Maybe some penny stocks, who knows. High tolerance is when it gets a little different. Of course, you can still, with the high tolerance, you can still invest with, you can still invest in the strategies with the low tolerance and medium tolerance, but usually if you have a high tolerance, you are fine with making trades in crypto, options, and ETFs, which are a lot more volatile, meaning that there's a lot more chance to lose your money, and these change in price a lot more, so that's why there's a higher chance of you losing your money. But these do have a high chance of making you a lot of money too. Finally, I just want to say thank you so much for tuning into my YouTube series that I put time into for the past couple of months. I'm so grateful for each and one of y'all, and I will link a Google form at the bottom again in this video. I'm just asking you guys for feedback and what you guys like or don't like, what I should improve on. But I still want to know you guys' feedback on what I could have done better, and if I were to continue the series, what I should do in the future. Thank you so much, and good luck investing.